Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all you guys had a very good day of trading today. And in today's markets, guys, well, the bulls and the bears continue to battle it out at the all-time highs. The SPY still being slightly in overbought conditions, and the same can be said about our brother here, the QQQs. Now, today we got a few pieces of news that brought in a bit of volatility. Number one, of course, was the ongoing disputes between President Trump and Jerome Powell. Trump constantly criticizing Jerome Powell about him keeping interest rates too high for too long. This time there was a report coming out from a senior White House official saying that President Trump was actually putting forth steps to possibly fire Jerome Powell, going as so far as to say that Trump had written a letter to that effect. And thereafter, in a press conference just 1 hour later, Trump actually said the complete opposite, denying that he planned to fire Powell, saying it was highly unlikely. So that was a big volatility factor for the markets this morning. And when Trump put the rumors to rest, pretty much we had a nice little rally. Other than that, in today's action, guys, well, it was pretty much macro related. We got some details as to producer inflation, which came contrary to the numbers that we got yesterday in CPI. CPI, the headline, came in hotter than the prior month. This time on the producer side, it actually came in lower, 2.3% on the year-over-year comparison. And in terms of month-over-month, we actually got a 0% read. So apparently no inflation when measuring a month-over-month comparisons. So not too bad there, guys. Just goes to reiterate that indeed the inflation narrative is probably on its way out. It can be a bumpy path back down to the Fed's 2% on CPI, but it is still trending in the right direction. So in today's video, guys, I got a few things prepared for you. Number one, we're going to go over a few earnings reports together. And of course, we're going to cover the elephant in the room, which is going to be ASML. ASML down today almost 10% after their earnings. In other news, though, we're going to cover a few more. So first, we'll do ASML just to get that one out of the way. And then we'll take a look at Bank of America and Goldman Sachs just to take a look at the rest of our bank earnings. Banks have been reporting as of yesterday and more into today's action. For the most part, those reports have been good and do show that the consumer is still on steady footing as of right now. So we'll take a look at a couple of those earnings. Thereafter, of course, we will get into our technical analysis rundown where we look at all of our major sectors. Take a look at the rotation that happened today. Today was actually somewhat opposite from yesterday, right? Yesterday, only the Qs were marginally higher and semiconductors were marginally higher. Well, today, everything else is pretty much higher except for semiconductors. So we'll take a look on that rotation, see how the markets are doing. Thereafter, we will explore our big tech list and derive whether or not some of these big tech names are in good swing trade opportunities or long-term portfolio opportunities leading into their own respective earnings. They'll all pretty much be coming out with earnings in the next 2 to 3 weeks of time. And then at the end of the video, as we usually do, guys, we'll take a look at our biggest gainers and losers of the day. Many companies, big red, but a lot of companies too, are actually performing very well today. Look at Circle, up almost 20%. So we'll talk about that at the end of the video. So without further ado, let's jump right into the action, shall we? So the SPY up 0.33, the Qs up 0.1%. The heat map, all things considered, guys, was a lot better than it was yesterday. In terms of big tech, only Amazon and Meta coming down. The rest of big tech performing well. And although semiconductors were down as an index, well, NVIDIA was one of the only big ones pushing high. Them and AMD. Financials, bit of a mixed bag right there, even though the banks reported fairly decent earnings. Healthcare actually coming up in a very decent way today. Did its part finally to lift the S&P 500 higher on the day. You can see here XLV was up a 1.24%. That was your best performing minor sector in the index overall. And thereafter, guys, we got the bottom half of the market coming back. Why? Well, because yields actually were on a bit of a downtrend today after yesterday's monstrous rally after the CPI report came out. Today's producer inflation report did contribute to those yields coming down. And as a result, your interest rate sensitive sectors, try to say that 10 times fast, actually came down as a result. Moving on to the one-day relative performance, guys, you can see even better the market rotation today to where more than most of all your indexes were actually higher. The only one getting left behind was energy. And in terms of the last 1 week, as the indexes right now battle it at the all-time highs, you can see the SPY's been stuck at the all-time highs for 2 weeks. No breaches to the upside, no breaches to the downside either. The Qs, same concept pretty much. Although we put in a new all-time high yesterday, we're just not getting an actual trend. We're not getting that lift over and above the all-time highs. As a result, guys, your 1 week relative performance stays somewhat mixed. Consumer cyclicals, real estate, industrials, tech to the upside, and to the downside, almost everything else The worst performers, energy, basic materials, and healthcare overall. So that being said, guys, before we jump into more technical analysis, let us dive directly into our earnings. And we're going to start off with the biggest one of them all. We're going to talk about ASML. So ASML ending the day 8.33% to the downside. However, at one point, they were down almost 11%. Now, ASML is still a fantastic company, guys, but this has been happening quarter after quarter, arguably now for the past 5 quarters in a row, to where ASML posts good numbers, but is unable to give Wall Street and give retail the guidance that we've been looking for overall. They've been somewhat timid in their guidance for the past 5 quarters. Take a look at the numbers right here. Fantastic numbers on this quarter, 12% beat on EPS and a 1.67% beat on revenues. However, look at the past 5 quarters, right? Last quarter, ASML went down 7. Did they have bad earnings? Nope. Fantastic earnings. The quarter before that, ASML went down roughly 6%. Do they have bad earnings? No, pretty good earnings. This one right here, guys, 16% to the downside. You guys probably remember that one. Did they have a bad quarter there? Nope. So it stands to argue, and this one as well. We'll just do this one, the last one, right? Did they have a bad quarter here when the stock dropped 12, 13%? No, and if you want, I'll do you one more for a bonus, right? April 2024. Did they have a bad quarter of earnings? Well, this one, you could argue that they did miss on revenue, but again, they went down. ASML has literally not went up, guys, in 6 quarterly earnings reports in a row. However, I say it often on the channel, guys. The reaction to earnings is not necessarily an indication of the health of a stock at all. It is a reaction to temporary sentiment. So we have to do a deep dive of the numbers to determine, is this company still in a very solid position? And the answer, at a quick glance, is absolutely, guys. Arguably, depending on the device that you're watching this YouTube broadcast on right now, well, you probably wouldn't even have that device, or it wouldn't be as good if ASML wouldn't be doing what it is doing right now. But ASML has had a history in the past 6 quarters of giving underwhelming guidance. However, the funny part about that is that every quarter thereafter, they tend to beat the guidance that they've previously given. So all things considered, let's jump into the numbers right now and see what we're dealing with on ASML. So here we go. Revenue beat by 23% year over year. Fantastic. Net bookings, they were flat, 5.54, but still a nice uptick in relation to last quarter overall. It's just flat in relation to the prior year. Operating income, this is fantastic. 45% operating income jump year over year. Their operating margins are still very high. And an EPS, cool beat of 47% year over year. So the numbers, guys, definitely aren't bad. So what exactly happened? ASML shares drop 11% after the chip giant says it can't confirm that it will grow in 2026. Now, this is very funny. When I saw this headline this morning, guys, it was a buying opportunity, and we'll get into it. But this headline is a bit of a sensationalist headline. It's quite funny. We'll get into it at the end of the article. Now, on Wednesday, they warned of the possibility of no growth in 2026. Even as it beat top and bottom line expectations for the second quarter. ASML's guidance for the current quarter missed expectations while it narrowed its own forecast for the rest of the year. Moving on further, third quarter revenue should be between 7.4 billion and 7.9 billion euros. The estimate was 8.3, so falling a little bit underwhelmingly in terms of that respect, in terms of those numbers for the third quarter. Now, I'll remind you in terms of ASML's business model, right? ASML sells $400 million machines, so the revenue streams are sometimes a little bit lumpy. The demand is always very high, as the demand for the entire sector right now is very high, but sometimes companies delay taking shipments or taking orders of certain quantities of these machines. Sometimes they're supposed to take them in Q2. They end up taking them into Q3. So meaning that depending on when these companies actually take delivery and pay for these machines, because they usually order them 1 or 1.5 years in advance, depending on when they take the delivery is when ASML can actually realize the revenue, the earnings, the free cash flow, etc. So the earnings cyclicality is a bit lumpy, but it's not because the company's demand is lumpy. It's just how the business operates overall. So I figured I should clarify that, yeah? ASML said it expects full year 2025 net sales to grow 15% year over year. So that's going to be a very strong year by the end of 2025. Here's what the CEO had to say, and literally only this line is what contributed to bringing the company down at 10-11%. Take a look. Looking at 2026, we see that our AI customers' fundamentals remain strong. So that was good. But then we got, at the same time, we continue to see increasing uncertainty driven by macroeconomic and geopolitical developments, aka tariffs. Therefore, while we still prepare for growth in 2026, we cannot confirm it at this stage. What? While we still prepare for growth in 2026, we cannot confirm it at this stage. Okay, so apparently the ASML CEO is kind of playing both sides right here. You can understand why he's doing that, of course, but ASML, as I've said in the last 6 quarters, they've done the literal exact same thing, and they have always proven to have some very decent growth. So, all things considered, guys, I remember in 2024, and we covered it in 2024 on the channel, they said the same thing about 2025. They said 2025 and 2026 should be good years, but we can't really confirm it at this time, right? Well, so far, so good. They're going to be growing 15% this year. So you got to take this one with a bit of a grain of salt. I do indeed believe it's going to be a good buying opportunity. Let's continue. The CFO said that the beat on was due to revenue from upgrading currently deployed machines, as well as tariffs having a less negative impact than anticipated. So it's funny, the CEO warns of macro ongoing developments, but here the CFO, the finance officer, saying that, well, tariffs are actually having a less negative impact than anticipated. Okay. Analysts anticipated net bookings, a key indicator of order demand, would come in at 4.19 billion euros over the April to June stretch, and ASML reported net bookings of 5.5 billion euros. So they beat on the booking guidance overall, or rather in terms of the bookings that they should have had this current quarter. ASML has benefited from demand related to chips required for artificial intelligence. Dassen said that this AI demand is a big driver for EUV, which is, of course, the lithography machines that ASML does. So all in all, guys, in terms of summing up this earnings report, I think it's a problem with messaging. This company hasn't had very good messaging to the markets overall in the past 6 quarters, and it has impacted their share price every single earnings cycle. However, let's get down to the basics, yeah? ASML is an absolute monopoly, guys. Any company that is trying to do what they do is years and years behind. As a matter of fact, the closest people that try to do this, which are the Chinese, that also have government subsidies trying to help them do that, are still 5 years behind. And it doesn't mean that they're going to catch up. ASML is still pushing the boundaries of the technology. As a matter of fact, they're working on new machines right now. It is a de facto monopoly. They serve other players such as TSM and Intel, people who have chip foundries, right? Their machinery is essential in producing the entire chip stack overall that then falls under them, right? So it's a picks and shovel company. Arguably, TSM is the picks and shovel company. This is the company that makes the picks and shovels, right? So very, very, very high quality business. It's a monopoly. In terms of the fundamentals, guys, no problems with the fundamentals at all, in my humble opinion. You can see here that they do have a very decent amount of free cash flow per year. Free cash flow will be growing in the near-term future. In terms of margins, take a look at margins right here. Margins have always been very consistent, right around the slightly above 50% mark. They bring about 35% of that to operating margins and roughly high 20s to low 30s in terms of net profit margins. That was no different this quarter either. So a very highly profitable company. And is it actually growing? What are the forecasts, despite what the CEO says? We'll look at the forecast. Even if 2026 is going to be, let's just say that what he's saying is true, the demand for these machines and demand for the sector and demand for AI, everybody knows that that's a secular trend that will be lasting for years into the future. So you would expect EPS to be growing. You will expect revenue as well to be growing over the course of the next 3 to 4 years. It's a fantastic company. The company also does a decent amount of buybacks. Here you can see their shares outstanding count, and they do a lot of buybacks overall. So they can do that with their free cash flow, and they also pay a tiny little dividend too. So the company, in terms of where it stands in terms of the fundamentals, it's an A+ from me, guys. We're coming back down into support right now, 760 down to 716. This indeed is another buying opportunity for either some swing trades or possibly even some long-term portfolio shares. If you take a look at the valuation of the company, I'll do 2, one for 2025 and one for 2026 using their EPS. Now, forward price to earnings for the end of the year is at a 27.5. For 2026, it is under 25. This is a very manageable valuation for a company that's a de facto monopoly. Their PEG ratio for the end of the year is 1.61, and the PEG for 2026 is going to be, sorry, there's a typo here. This should be 2026. It should be just under 1.5 with a free cash flow yield of 3.34. I think this is a very fair valuation, guys. I've been an investor of ASML for a very long time at this point, since about 2018, 2019, and my conviction on the company has never changed. They are one and alone in terms of the stuff that they do. I love investing in monopolies, and the fundamentals of this business still remain strong despite the short-term sentiment. Every single earning so far, I have stated that this one has been a buying opportunity. I think it's just a question of time, guys, before they resume their rally to the upside, which is what everybody is feeling as well at the current time. That's everything for ASML earnings, guys. Hopefully you're able to get a little bit of insight from that. Now let's look into the banks, right? We're not going to spend too much time on these, but I want to analyze the banks in terms of the same That's last quarter. I want to analyze the banks in terms of the same things that we were looking at for yesterday, right? Now, we could talk about net profit margins, customer growth, and everything like that from the banks. But at the end of the day, the one thing that you want to understand from the banks is what is the narrative surrounding the consumer, of course, because what is the biggest narrative that can derail the markets right now? Well, inflation is putting a big dent in consumers' pockets. Consumers are over leveraged on credit. And as a result, the banks could forecast a possible recession. We want to know if that narrative is true or false when we dive into the numbers of these earnings. So far, with the earnings we got yesterday from JP Morgan, Wells Fargo, and others, that narrative was nowhere present in the fundamentals. Can we see it with Bank of America? Well, let's look into it, shall we? In terms of their earnings today, they had a very good performance on EPS, but a slight little miss here on revenue by about 1%. Let's look into the article, shall we? Bank of America puts up mixed results as net interest income misses analysts' expectations. It was the only major U.S. bank to fall short on revenue for the quarter. So just goes to show it's a Bank of America problem. It's not an industry problem, yeah? Bank of America said that the profit, however, climbed about 3% from a year ago. Revenue rose 4%. So despite missing the estimates, it was still up on a year-over-year basis. $14.82 billion in net interest income was a little bit shy of estimates to the tune of $70 million. Net interest income rose by about 7%. So even though once again they missed on net interest income, it was still up by about 7% in relation to last year, so not too bad. The legendary CEO Brian Moynihan pointed to the larger trends at his bank, saying that it was the fourth consecutive quarter that NII climbed amid rising deposits and loan growth. Consumers remained resilient with healthy spending and asset quality, and commercial borrower utilization rates rose. In addition, we saw good momentum in our markets businesses, so definitely no red flags just yet in terms of the consumer. The firm that said as well that investment banking fees fell 9%. Once again, this is kind of contrary to what we've been seeing from Goldman Sachs, from Morgan Stanley that reported today, and even from JP Morgan yesterday. So it seems to be a bank-specific problem and not an industry problem overall. Taking a look at some of the credit metrics for the bank, is the bank well capitalized and are consumers doing okay? Let's have a look right here. CET1 ratio, capital requirement ratio, 11.5%, which is well above the regulatory minimum, which is about 9.7%. Return on total capital employed of 13.4%. The bank is indeed expanding well. They added 7,100 net new relationships across Merrill Lynch and private banking, which was good. Here we have 28,000 new bank accounts in terms of investment management and global wealth. 63% of clients having a banking relationship, 4.4 trillion in client balances, which was up 10% year over year. That was fantastic. And in terms of consumer banking, sorry, I should have done it left to right. Consumer banking, 175,000 net new checking accounts, 26 consecutive quarters of net growth. So fantastic numbers. No matter how you cut it, guys, the banks have been putting up very solid numbers. I know their share price hasn't responded as such, but we're going to talk about that in a few minutes when we take a look at the charts. The only thing that I wanted to show you guys additionally is metrics in relation to the asset quality. So here's the asset quality of the bank overall, talking about consumer and commercial. Net charge-offs rate. Here you can see that we're up actually 15.25. JP Morgan was down. But in terms of the net charge-off ratio, because we know, of course, that the bank acquires more and more customers every quarter. However, what is the percentage of those people that are doing net charge-offs essentially, right? Just writing off their debt because they can't pay anymore. Only 0.55%, which was good. In terms of credit card losses specifically, 3.82% in the second quarter, and that is versus 4.05 in Q1. So is the credit card loss rate increasing or decreasing? It's actually decreasing, guys. It doesn't show that the consumer is, up to their neck in debt too much at all, right? Or you would expect a net increase of that number over the past few quarters, and we just have not been seeing it now 5 quarters in a row. And I showed you guys the same thing when we looked at JP Morgan yesterday. Provision for credit losses, that was actually increased. They chose to build it a little bit, I would assume, because they've been onboarding so many clients. But is it far and above what we've been seeing over the past 5 quarters? The answer, of course, is no. In terms of consumer net charge-offs, this one encompasses the entire bank across its commercial lending divisions. If you only want to look at the consumer, right? How much is it? Right now, guys, consumer net charge-offs actually down in relation to the past 2 quarters, and as a percentage of overall consumers with the funds that they have with the bank, of course, it is actually down to 0.9%, which is the lowest read that we've seen in 5 quarters overall. So not too bad overall, guys. I wouldn't say there's any red flags right here. Commercial, you can see a small little uptick, but still within the confines of logical reason that we've been seeing in the past 5 quarters overall. You're definitely not seeing a blow up right there. So overall, guys, in terms of Bank of America earnings, they were okay, but we can see a very common theme now. If we're going to wrap up the bank earnings, we can see a common theme here happening across the banks, yeah? JP Morgan, great earnings, the stock was down. Wells Fargo, okay earnings, despite missing on net interest income, their stock was down. Bank of America, okay earnings, they missed on revenue, but still, their stock was down. Goldman Sachs, wait till I show you these earnings in a few moments, guys. They crushed it. Their stock was slightly higher, but definitely not getting the pop that some people say they would have deserved. And Morgan Stanley, we're not going to go through their earnings today, but they actually crushed it, guys. I mean, just the headline right here, right? Earnings 15% up year over year. Look at these numbers. They were fantastic, but they were down. So could this be a precursor to some of the earnings that we're going to have over the course of this quarter? Maybe. And the reason is the following, guys. A lot of these banks and a lot of the market has ran excessively hot since the tariff lows, creeping into all-time highs. So of course they have to justify the speed of these rallies. And I just think right now that it's just a lack of momentum overall in the market. The market put in such good gains leading into the earnings season. Like look at the last 2 weeks leading into this earnings, right? Bank of America was up 11%. JP Morgan on its own was up from here, after the consolidation period into earnings was up 10%. And so on and so forth. Wells Fargo from the consolidation period in the last 2 weeks, 14%. So they're just giving back a little bit. Do they have bad earnings overall? No. We've been through many of them so far, guys, and you guys can probably understand the consumer is still healthy. No negative guidance from CEOs overall. And overall, in terms of net charge-offs too, everything is not looking too bad. In terms of Goldman Sachs, just to wrap it up, we'll only briefly cover the article just so I can show you guys, because another portion of the narrative that we started during the tariffs here is that they were nervous that, because of President Trump's policies and because of the quote unquote death of American exceptionalism and that nobody would want to do business with America, there was a lot of business owners and business executives across the United States that were kind of reluctant to start doing major deals because of the uncertain timeline. Well, if we're talking about M&A, mergers and acquisitions and big deals, there's no one that does it better than Goldman Sachs, right? So take a look at Goldman Sachs. They topped the estimates as traders generated $840 million more revenue than expected. So the markets business has been good for them, but let's take a look at M&A as well. Second quarter profit jumped 22%. That's massive, guys. Revenue climbing 15% year over year, $1.1 billion more than the estimate. That is nuts. A revenue beat came from equities trading, which was a 36% jump year over year. Fixed income trading rising 9% year over year. So the trading division is really good. Why? Well, because the markets have had a tremendous amount of volatility. Tons of buys, tons of sells, tons of client acquisition as well. So very normal at that rate. Goldman said that investment banking fees jumped 26% from a year earlier to $2.19 billion as more advisory deals closed. And when I looked at the earnings transcript for this company, just very briefly, did an AI summary for it, they said that the mergers and acquisition landscape and that overall the quote-unquote deal-making landscape was actually a lot better than it was earlier on in the year. So once again, guys, when we're looking at the bank earnings, we have to talk about narratives. And I do believe that the narrative that started off this year, the fact that there was not going to be any big deals this year, that large businesses and business executives would be hesitant to do those deals, those narratives are all being disproven right now. And then the other part of the narrative, that was the fact that the consumer would be heavily underwater by now, would be really, struggling under the weight of all their debt and credit card losses and stuff like that. We're just not seeing it in terms of the numbers either, right? So those two narratives, in my opinion, until we actually get some concrete evidence that they're actually going to show up, suffice to say, you may as well take the actual data, which is the fact that the consumer is doing well and that corporate America is indeed still doing deals under President Trump's presidency. So keep that in mind, guys, or under his tenure, rather. So keep that in mind for Bank of America. Bank of America, for me, guys, is probably a little bit of a swing trade down here, $43 to $42. I don't invest in large banks as part of my long-term portfolio. They just don't grow fast enough. But if I was looking to take a swing trade on some of the banks, it would have to pull back into some support ranges. Bank of America, that's like 44 down to 42.5. This little support region right there. If we're talking about JP Morgan, I'd probably have to take them closer to the 12 EMA, talking about like 270 down to 260. If I can find a dip down there, I might be looking to play. But Goldman Sachs and Morgan Stanley, they're just way too elevated. I'd have to see a back test of like 641 on that one there. And Morgan Stanley, well, they came into a temporary level early this morning. I'm not one to play some swing trades on the investment banks overall, but those are just some levels. If you guys were interested, you can clearly see, right? This is kind of like the all-time high area that we kind of broke through, sat on prior. This was resistance before, so now it's being used as support. Not a bad opportunity for a bit of a swing trade long, but still, guys, not my favorite trade in the business overall. Suffice to say, that's everything I had for you guys in terms of earnings for today, and that wraps up your bank earnings overall. So there's going to be a few smaller ones here and there, but for the most part, the banks have had a very decent quarter despite what their price action might show. And with that being said, guys, let's jump into our indexes right now. All right, so we're going to start off with the SPY, guys, and we're going to run through these quickly because really nothing much has changed over the course of the past 2 weeks. We're still working with the exact same levels here. No new breach of the all-time highs, and we are still working with the exact same higher low, which is roughly 618. If you breach 618 to the downside, it's a very clear daily downtrend. At the current time, the bulls are still in control. This is somewhat of a sideways bull flag reacting nicely from the 12 EMA. In the event, though, that you lose this and go for a downswing, you guys must get it by now if you've been watching the videos, right? Who's in control of the weekly charts? Very clearly the bulls. So even if we do get a pullback right now into earnings season, you'll be looking for a weekly higher low, possibly back testing the prior all-time highs, which once again is 610 down to roughly 600. The bulls have a lot of space between them and the weekly higher low, which is 592. You would just be looking for a very casual pullback into the previous all-time highs and maybe looking to load up for leg number 2. So the SPY not looking too bad at all, despite doing a whole lot of nothing over the course of the past 2 weeks, as we see the money slosh around from sector to sector. Moving into the Qs right now, Qs up 0.10%, also no new all-time highs, but kind of the same concept, right? Have we really been doing that much over the past 2 weeks? Not really, right? New all-time highs were set yesterday, but really, not getting much lift and not getting much follow through. That being said, the higher lows are right here, guys, at about 550, let's call it, yeah? In the event you break 550, you would lose the daily uptrend, and you open the door for the daily downtrend, and you open the door for the weekly consolidation as well. Similar to the SPY, though, who's in control of this chart? It is clearly your weekly bulls. The higher lows are all the way down there at 522, which is also coincidentally into our prior resistance range of the previous all-time highs. That'll now be support down here at about 538 down to roughly 523. So you could see something like this in the event that we unwind. We got a lot of support below, a lot of distance as well for the bulls to gain a little bit more momentum, a little bit more support, a little bit more buyers, and then possibly go for leg number 2. July is seasonally a good month for the markets, but I'm going to be curious to see, guys. You know, companies like ASML, it's happened a lot so far, but companies have rallied thereafter. But, you know, a few names come to mind, right? Micron had fantastic earnings and still went down. CrowdStrike had fantastic earnings, and after their earnings, they went down a little bit, but it took them a while to kind of grind higher. Spotify, another one that comes to mind as well, back here in April. They had very good earnings overall, despite missing on EPS here because of a one-line item. Their EPS without that item was actually good. It took them a while to kind of rally back, right? And now we can see the banks, same concept. They had good earnings, but all of them coming down. And I think the key point here is that when we're looking at companies that have rallied a lot towards the all-time highs, maybe there's just going to be too much expectations on these companies and they can go down. So the way that I'll be approaching this earnings season overall, looking at these indexes and whatnot, is in the event that we have some earnings pullbacks that are largely due to sentiment alone, such as ASML, not a shift in fundamentals, but only short-term sentiment, meaning the CEO says something that the market doesn't quite like, or because the companies have rallied so much, it's incrementally harder for them to keep pushing new highs without a pullback because they've just ran so much, right? Those are the styles of dips that I'll be buying throughout this earnings season overall, and I'll be taking you guys through it every time I do one of those purchases. Moving on to XLF financials right now, recovering a little bit from the lows of the day, however, still in the context of a daily downtrend. You're still going to be anticipating, guys, looking for a weekly higher low, yeah? So the weekly bulls are still in control of this chart right now. The weekly higher lows are set at 49.81, and right now we are just back testing support. Support is 52, down to roughly 50.4. So I would not be surprised if the bulls have it in them to kind of reverse a little bit of this damage soon and try and go for the new daily uptrend formation. You only have to get a little bit nervous if you come all the way down here and flush 49.91. That will be unfortunately a monthly fail of the all-time high, and you might just be looking for a bit of monthly consolidation. So far, no indication of that. So we'll kind of take it one day at a time. Not gonna lie though, financials are looking pretty good for a swing trade long right here. If you're trading this with a longer term time horizon for the expansion into the end of the year and into rate cuts, well, there's an entry that can be made here, guys. The stop will go below there, and then you'd be targeting psychological levels such as your 55. So a decent little swing trade there on financials overall. Moving on to healthcare, the sector that just seems to do absolutely nothing. Price action is very messy right now. Yes, it's a daily downtrend, but in the confines of just a weekly tightening range, yeah? So we're kind of just playing around with this 200 weekly EMA. Just use historical context, right? When the XLV comes into the 200 weekly EMA, this is COVID. Is it traditionally a good time to buy the sector? Well, if you had done that at any point over the last 15 years, it would have been a very profitable endeavor. So I know what you might be thinking. Healthcare just moves extremely slow and it's been so out of favor. This is true, but you know, the fact that it's been out of favor doesn't last forever, right? Look how much it's diverging from the SPY. Usually those divergences do not last forever, right? We had one back here and it did start playing in the direction of the markets again before we got liberated from Liberation Day, of course, right? So the divergences do not always last forever. I'm pretty sure that we are closer to the end of the divergence than we are to the beginning of it. So I still am a fan of building some positions on healthcare, especially due to the fact that we're also into support, right? So you have a few things here. Divergence from the SPY, testing of a long-standing moving average that tends to be a good location to buy, but you just have to be a little bit patient with this trade, yeah? Moving on to semiconductors right now. Semiconductors down 0.52, but they were able to claw back some of the losses throughout the day. Keep in mind, though, this index is running hot, guys. This has been your lead bull now for a while. So in the event that we drop, let's just say tomorrow, sorry, that's not the right chart. This is the right chart. Let's just say TSMC gets the ASML treatment. They put out really good numbers, but something the CEO says or something that Wall Street interprets brings TSMC down, then you might actually get some of the follow through. But just keep this level in mind here, guys. 282. 282 is your daily higher low. It's been a very beautiful daily uptrend, but we know that we're in overbought conditions right now, and any negative catalyst could just be the one thing that sends us into a bit of weekly consolidation. If that does happen, you're looking for a higher low. The next area of support is probably going to be this guy right there, 276. It's not a big level, but it's the closest one that we have, yeah? And any move considerably lower than that, will we just be looking for a back test down there, right? 260 down to 247. I know some of you guys are saying that can't possibly happen. Don't ever approach the markets with that can't possibly happen attitude. You might just be surprised at what can actually happen. But even if we do pull back there, guys, you're just looking for a weekly higher low. The bulls are in absolute full control. So we will take this one day at a time and one earnings release at a time. But I'm pretty bullish on TSMC earnings overall, all things considered, in terms of just the numbers that they're going to put out, right? Who cares about the short-term earnings move in terms of the narrative that it'll be around the stock? The demand for the next few years is going to be extremely strong across semiconductors and across in terms of the AI trade specifically. Moving into the Russell right now, the Russell up 1.01%. Recovering a little bit. This one really moves with yields, guys. Just pay attention to the yields and you will be able to derive some trade opportunities from the Russell. This was a daily uptrend. We lost it by flushing the lows into yesterday's price action. So as of right now, guys, what are we looking at, right? We got rejected at resistance, 232 down to 225. The weekly time frame is the cleanest chart, in my opinion, for the Russell. Right now, we're just looking for a higher low, casually coming down into our support range, 216 down to 207. In the event that we dip a little bit more, I might position for a swing trade long, potentially bringing us into resistance. But you know, even if we lift off right from here, you're just looking for a weekly higher low for possibly the capacity to attack the above resistance range. So the Russell is not looking too bad, but it's going to be bumpy, guys. The one thing that the Russell really needs to get the crazy expansion that a lot of people want it to have, it needs clear skies, right? It doesn't need, you know, a cloudy tariff narrative. It doesn't need a cloudy rate cut path narrative. It really just needs a blue sky ahead of it in terms of its ability to break out and really start lifting some of those small and mid cap names. Yeah. Moving on further, guys, in terms of the VIX, we'll take a look at the VIX real quickly. So the VIX down 1.38, same concept, guys. Now is still a good opportunity to be building some leap call options on some of your favorite companies that may have been left behind so far. In the event that the VIX does pop up into the early stages of the resistance range, which is 22 up to 29, well, guys, you're going to probably be looking to sell options. In terms of the catalyst that can bring us into here, think of anything related to tariffs, etc., right? That would be the one catalyst that could bring us a bit higher. Short of that news, we will probably stay in the lower ranges of the VIX. So as a result, I don't never play the VIX in terms of trades. I just look to either buy or sell options. I'm a buyer of options, the lower the VIX goes, and I'll be more of a seller of options, a more aggressive seller of options as the VIX creeps higher. Moving into the yields right now, yields were down after PPI. I mean, these are just all over the place, guys, right? It's really not doing anything. It's a push and pull between the tariff narrative, the inflation narrative, the rate cut narrative, the bond vigilantes, demand for U.S. assets across the world. So, you know, this trade has many faces at any given time. I wouldn't look too much into it, but the one thing, as I've been clearly saying on the channel, if you really want to see yields start to actually die, you're going to need a consistent break of 4.23. Give me the break of 4.25, 4.23, let's call it. That'll be a weekly downtrend, and that can start for some monthly momentum to the downside. And the same thing on the 20-year yield as well, right? We're staying excessively high in around 5% right now. If you really want to see this start to downtrend hard, you're going to need a break of 4.7 to the downside. And as a result, the bonds are just going to stay roughly flat and muted for now, which is why I keep saying on the channel, if you are trying to do the bond trade, you're going to have a lot of patience, because I don't think this one's going to get the lift that people anticipate, maybe much before Q4 or maybe even Q1 of next year. So keep all of that in mind. Taking a look at gold, gold ending up the day about 0.68%. Not a bad day for gold, but gold, you know, doing a whole lot of nothing, right? Yes, you can make an argument that we're trying to go for a daily uptrend, trying to go for the higher low for the expansion. But in all reality, guys, gold has been doing absolutely nothing, right, for a very long time at this point. The weekly bulls are still in control of this chart, but it's just not so clear. Yeah, we do not have the clear-cut expansion that we once used to. I think it'll move depending on risk catalyst to the market overall. And we know that since the end of April, when there was the tariff pause and more clarity in the markets, gold has just really not been its former self overall. So in terms of any further trades on gold for me, I'm going to have to wait for either a backtest of this lower location. That would probably open up a swing trade long with some stop losses below 32.62, targeting the top end of the range for some expansion. And in the event that I wanted to go short, guys, right? Well, I'd probably be looking for a breakdown below the backtest and then maybe the downside trade. The reason that I have a bullish leaning thesis here into support is quite simply because the weekly bulls are still, technically speaking, in control of this chart, looking to set up maybe a temporary bull flag. Moving on to Bitcoin right now. Bitcoin actually marginally higher today, 1.8%. Pretty good day for Bitcoin overall. And that is because we had some news today, right? In terms of the approvals, finally. Yesterday, there was a vote in terms of trying to pass Trump's crypto bills. So the bills have been the bills have been advanced, but still no former passing overall. They're making progress right now, but still the final confirmation has to be given. Bitcoin took that a little bit in stride today as President Trump is trying to put a little bit of pressure to get those bills passed. Essentially, it gives more legislation for anything from stable coins to crypto overall, more deregulation for the space, which is what the space has been pushing for the last few years, to be specific. But Bitcoin not looking too bad overall in terms of the price action, guys. It's always been a very clear daily uptrend, yeah? You're looking for the daily higher low at the low of yesterday, 115.5, and looking for some possible expansion. In the event you get the fail of the new all-time high and the rollover of yesterday's low, it would be a tentative daily downtrend, and you would just be looking for a little bit of weekly consolidation, yeah? Anything above 98,000, looking for a weekly higher low for possible further trend continuation overall. Bitcoin is looking very strong, guys. The next area of fallback would, of course, be again in the 111.5 down to 109 range. I'm still very bullish on Bitcoin overall. Your next target would be the 125,000 psychological mark. Your bulls stay in control right now of all major timeframes, and the altcoins are finally starting to show some signs of life, right? Usually Bitcoin moves first, The altcoins move second, and some of those trades are looking pretty good overall. Ethereum now blasting through its 3,000 to 2,800 resistance range. The next target for ETH is going to be 4K pretty much. 4,000 down to about 3,750 is the target range. And another one that gets a ton of volume is Solana. Solana also not looking too bad at all, looking for the weekly uptrend recapture, trying to blast through its own resistance highs of 195 to 176. Looking good, right? The last time we talked about this was late June. We were saying that some of these positions may be good while Bitcoin was consolidating. So hopefully you guys are able to accumulate some swing trade positions overall. And now you must be in very nice profits. Just keep in mind those price targets for profits, right? High 3,000s for ETH. And in the event you are in Solana, this next profit target right here is going to be coming up quite shortly. So now that's it for our major market rundown. Let's dive into big tech, shall we? So we're going to start off with Apple. Apple up 0.5% today, but still in the grand scheme of things, guys, Apple is doing absolutely nothing. It's been consolidating for the most part of the last 2 weeks overall. It is somewhat of a bull flag right now, I would agree. And the reason that we can make that determination is because on the weekly charts that do provide a bit more clarity, you're just looking for a weekly higher low, right? Anything at this point above 195, looking for a weekly higher low for a possible second attempt at the resistance range. That resistance range, once again, is 221 down to 211. Not the worst opportunity to be building some longer term swing trades on Apple. And when I say longer term, I'm not talking about the next 2 days. I'm talking about the next quarters, right? You might be able to see a little bit of an upswing on Apple. Apple is still one of the ones that is down a lot year to date in relation to its sector peers, down 16%. So this one has been lagging behind not only its sector, but also behind the S&P 500. I would not be surprised if Apple does play a little bit of catch up, and that is in spite of the problems that it's been facing, the slower than expected iPhone refresh cycle, the tariff costs and increases of production costs, of course, in the Chinese markets as a result of those tariffs, and of course, their slower than expected AI rollout. All those things I do think are somewhat temporary issues for Apple, but at the end of the day, they have one of the strongest ecosystems in the world, and I will be looking to possibly build some longer-term call options here, possibly with some 2027 dates in mind, possibly looking to recapture some of the high and mid 240 range right there. I'm moving on to AMD right now. AMD up 2.87% on the day. Looking not too bad, guys. Very beautiful day for AMD. It just continues to plow higher, 160. I remember when people were calling it down here, advanced money destroyer. Nobody wanted to touch this stock. Whenever I used to say that this entire time on this drop down here on the channel, I was saying it was a buy almost every single day. And more often than not, I would get comments saying, no, AMD is such a trash company. I can't believe you're buying that. I can't believe you're telling people that it's a decent buy. Well, here we are now, right? So the long-term company fundamentals do come to fruition in the long run. Of course, sentiment can affect a stock in the short run, but that's not the point, right? The point is to always focus on the long-term fundamentals. And the long-term fundamental thesis of AMD, guys, has been established over the course of the past 5-6 quarters at this point. It was just a question of time. EPS ramp is phenomenal. Revenue ramp is phenomenal as well. That being said, in terms of the technicals, we've clearly mounted above an area of resistance right now. 155 down to 145 is that 10-point range, and the daily bulls remain in absolute full control of this chart. Coming in here, bit of a downtrending cycle right there, which set the weekly higher low. The cleanest time frame, in my opinion, guys, is the weekly chart. I'm expecting good things for AMD, guys, throughout the remainder of the year and through 2026. I would not be surprised. I mean, I'll just throw it out there, yeah? Within the next 6 months, I would really not be surprised if AMD is in around the $200 mark. It's looking fantastic right now. If we're looking for a bit of a re-entry trade, it would be a back test of the support range, talking about 155 down to 145. I know a lot of people are saying you're going to be late to this trade. In my opinion, you're not late. Just focus on the fundamentals, and they are somewhat quite cheap right now in relation to the rest of the industry. Moving on to Amazon right now. Amazon down 1.4% today. Not too bad here at all, guys. I mean, Amazon's still in control of the trends, as we can clearly see. It's a daily uptrend looking for a higher low. Anything above 219 looking for a higher low for possible further trend continuation overall. We've been battling with this resistance range, guys. 228 up to 218, or down to 218 rather. And even if we unwind into earnings, daily downtrend, it's not that big of a deal. Amazon bulls control the weekly timeframes as well. Take a look at this. Weekly time frame is very attractive right now. Any downswing on Amazon, I will be buying both for some possible swing trade longs, maybe into the moving averages, 213 down to 210, but also to sell some puts under the market. Something that I haven't done really in the past 2 weeks. We played Amazon a ton back here in May and June when it was near the support range, but now not so much that it's been rallying. I still have a large amount of shares, though, for my long term. It is my biggest position by far. Moving on to Google right now. Google up 0.37%. Not too bad. Google right now approaching its resistance range as well. 185 up to 190 is the infamous resistance range for the company, but all things considered, it's not doing too bad, right? Daily uptrend was never lost. Bit of hesitation here, brand new highs, and any pullbacks from this resistance area looking for a higher low. Anything above 174.50, looking for a higher low for further trend continuation. In the event that we come down a little bit, I might try my hand at selling some short put options down here at the 175 range, but Google overall is looking quite good, both on the technicals and also in terms of the fundamentals as well. Now it's about, let's call it 7% higher than here. Google's fundamentals are still good. It's still one of the cheapest tech stocks in the entire market and still one of the stocks that represents the best risk to reward, in my opinion. Moving on to Meta right now. Meta down 1.05%. Uh-oh, what's happening to Meta, guys? Well, pretty much absolutely nothing, right? Just normal price action, in my opinion. Meta with the daily downtrend right now coming into our prior range of consolidation, which of course is 704 down to 681. So daily downtrend, you guys should instantly understand that we're just looking for weekly consolidation. Meta has a lot of space still. Anything above 680, just looking for a weekly higher low for possible further trend continuation, guys. In my humble opinion, Meta has earnings here on the 30th of July. Maybe it doesn't push above a new all-time high. And maybe as well, it doesn't break below this low. I think Meta may just maintain in a range until its earnings. There's been a lot of talk around CapEx and Mark Zuckerberg spending a ton of money, not only on hiring people, but also in terms of expanding his data center footprint too. So Meta's not looking all that bad. No swing trades from me at these current ranges. However, if Meta does drop below 700, possibly into like the 690, 680s and retest this area, I might be adding a few shares to my long-term portfolio. The valuation is not that bad right now. It is somewhat quite manageable, and I am really bullish on the company leading into the next few years. Margins are going to be very good. They're spending a lot of money, but the ROI on that capital spend, I do believe will be good. Look at the EPS expansion in the next 4 years, and the revenue expansion is fairly obvious as well. Moving on to Microsoft right now. Microsoft flat on the day. We will see. Can Microsoft ever get a daily downtrend? I don't know, but it's been literally an entire quarter of only a daily uptrend and maintaining this 12 EMA. They've been grinding higher almost every single day. Still a daily uptrend. Your higher low is there, 497. In the event you breach down below, lose the daily uptrend and the 12 EMA, that may be synonymous with your daily downtrend start. And thereafter, you'll be looking for a bit of weekly consolidation. Weekly consolidation could take you into, let's call it 473 down to 463, 12 EMA, and the prior all-time highs. Maybe after earnings. I don't know. I think Microsoft's going to have great earnings. However, is it going to be like the banks and like Micron and like many other companies that had good numbers, but that simply went down after earnings because they've ran so much? I don't know. Maybe earnings are a casino. I tell you guys all the time, right? The move on an earnings day is very difficult to predict. That's why I don't try to predict it. I just react after the fact. Microsoft at $500, guys, is fairly expensive. I'm not adding any new shares, but I'm holding every share that I do have. On to Netflix right now. Same thing with Netflix, guys, right? Netflix, people said that it just could not drop. It was just going up and up and up. And then eventually, what happened, right? Well, we lost the 12 EMA and we set the daily downtrend. And as a result, we might just be looking for a bit more consolidation. However, Netflix has earnings tomorrow after the bell. The expected move is going to be 7%. As a result, rather than giving you guys price action targets, right? Because we know that whatever this trend in terms of the short term might be, well, 7% up or down is probably going to either continue the downtrend or just completely annihilate it and put us back at the all-time highs. 7% to the upside is new all-time highs, and 7% to the downside would be smashing a key level, our next area of support, as a matter of fact, 1215 on a 1188. In the event, we're going to cover it after earnings tomorrow anyways, guys. No positions for me leading into earnings. I have a ton of Netflix long-term shares that I am not selling. Where would I be buying more Netflix shares, though? Probably around 1,100 in the event earnings are not well received, because I'm pretty sure they'll have good earnings. But let's just say, just like ASML, they are not well received by the market, yeah? Which leads us into a 7-8% sell-off. That, of course, would also be a loss of the weekly higher low and a possible loss of the weekly uptrend. And as a result, go into a monthly period of consolidation for this stock that is pretty much essentially only been moving higher over the course of the last quarter. Monthly overbought conditions, I'd be looking for, anywhere between 1,100 and let's say 1,000 for a retest down there. I want to see them come back and test this monthly 12 EMA. And don't say it's not possible. Netflix does it all the time, right? I just need a closer entry to the 12 EMA. Give me some much needed consolidation and I will play. And if it just keeps running higher, well, I already have all the shares that I wanted to, and I was fairly clear on the channel that this indeed was the buying opportunity during the tariffs. Moving on to Netflix right now, or NVIDIA right now. NVIDIA up 0.4%. Another very strong day for NVIDIA, holding near the highs. Daily overbought conditions, the RSI is roughly 80, so it's very tough to start a position up here, guys. Starting a position up here on NVIDIA is very, very, very greedy, right? If you were not able to buy the dip this entire time, or this entire time, or this entire time, or even back here, I mean, what are we doing buying up here, guys, right? If you're waiting for price to convince you, you're doing it the other way around. You should be convinced by the fundamentals when they get cheaper and cheaper, and then kind of just wait it out, right? Don't get seduced by the price action of a company. Sure, can it move higher? Of course, everything can move higher, guys, but it just does not build good trading or investing habits overall. So that's why I'm just not a fan, right? I understand playing momentum is one way to do things, and that's fine, provided that you're not doing it with super, super heavy capital, but I digress, right? Moving on in, NVIDIA, very, very solid right now. Daily higher lows are still set down here at 151. Any move lower looking for a new higher low. And if we pull back too much and set the daily downtrend, maybe after TSMC earnings, if they're not well received by the market, guys, you're just going to be heading into weekly consolidation, right? And I think that the weekly chart makes the most amount of sense on this stock right now. Huge weekly move over the course of the past quarter. Any significant declines, you might just be looking for a back test here of 150 to 145. Many people say that it's not possible. We can't possibly drop 12%. Guys, you know how NVIDIA moves, right? NVIDIA can drop like 5-6% in one day. So it would not be out of the question at some point. If it's not in July, maybe it's in August. Keep in mind, you do get a bit of choppy seasonality in the fall months. So if it's not this month, you might just be getting a pullback on NVIDIA eventually. If not, what? We think it's going to go in a straight line to 220? I mean, maybe, but that's the unlikely scenario, all things considered. But congratulations to all the NVIDIA bulls out there. It's looking quite attractive right now in terms of the sizable gains that everybody's been having so far. Yeah, moving on to Tesla. Tesla up about 3.5%. Not the worst day for Tesla, but also, I mean, I say it's not the worst day for Tesla because, I mean, any day that's not, a Twitter war is, I guess, a good day for Tesla at this current stage. But in terms of the fundamentals of the business, guys, it's all going to be about earnings, which are next Wednesday. That being said, the focus is going to be on EPS, free cash flow, and net margins because we have lost the EV credits, both the $7,500 one for the consumer and also the regulatory credits that it receives from other auto manufacturers in the US. So that's obviously going to impact margins. How much? That is, of course, going to be the billion-dollar question. And in terms of the price action, guys, I mean, you could argue that Tesla is slowly making a recovery. It was a daily downtrend. Nice engulfing move right now by the bulls, looking for a reset of the daily uptrend and possibly looking for a little bit of a push. But all things considered, guys, it is literally just in a tightening range right now, trapped between two levels, 360 to 340 and 300 down to 260. I will not be positioning for this one for any swing trades leading into earnings. I'd rather just wait for the earnings to be released. If we get a big time short-term plunge, we might be able to play some action down there into the depths of support. And if we get a monster rally, well, we might just be able to play the good old breakout, retest, and run trade. So keep those two styles of trades in mind. We'll be covering their earnings next Wednesday. On to Palantir right now. Palantir up a 1.57%. Not looking too bad on good old PLTR. Brand new all-time high as well. Huge V-shape engulfing move for the bulls. Looking quite strong, all things considered, guys. And in the event we kind of pull back a little bit, you're just looking for a higher low. Anything above 129, looking for a higher low for possible further trend continuation, guys. And even if you unwind this, I'll remind you who's in control of the higher time frame. It is still your weekly bulls. We've never lost this. Looking very good, right? A lot of space, anything above 128, looking for a higher low. There's not much to say. We cover this one all the time. The bulls are in full control. Sentiment has taken over this stock. Palantir is a cult overall. But the valuation, guys, is, I mean, as it pushes higher and higher, this valuation just gets more and more and more extreme. It's not as if every single day they're improving their revenue and EPS growth rates. The revenue and EPS growth rates for the next few years are already fantastic. So come earnings time, they're going to have to prove to us if they actually deserve this valuation. So I think at this point, guys, the risk on this stock is definitely to the downside, not in terms of FOMO and missing out on very short-term, very quick gains, right? It's not as if the stock is probably going to double in a short amount of time, but it could get cut, you know, by a wide margin in the event that the earnings, I mean, the earnings are going to be good. But, you know, anything under like a 35-40% revenue growth rate for Palantir is going to pull the stock back, just in terms of the law of future expectations and how that plays into forward valuations. Yeah, moving on to SOFI right now. SOFI up 2.05%, still hovering in around the new 52-week highs. That being said, the bulls are in full control of this chart right now, looking quite decent. Even if you do pull back, looking for a higher low, anything above 1740, looking for a daily higher low, maybe back into the 12 EMA before a possible furtherance of the rally. In the event it unwinds, if you give back too much, you open up the door for the daily downtrend, and you open up the door for a bit of weekly consolidation. All things considered, guys, last week's candle was very strong. I would not be surprised if this week is green for SOFI, provided that the markets remain with a bullish leaning bias. The next target for SOFI to the upside, $24 to $25. Those are some of the highs of 2021. It's looking quite good right now, guys, but I'm not saying that I'm a buyer of SOFI at the current time. You guys might remember that I was saying here was a buy on SOFI, here was a buy on SOFI. But eventually, right, you kind of have to stop buying, essentially, if you want good compound annual growth rates on your equities over the course of the next few years. It's not a terrible valuation right now. I'll redo it for you guys towards the end of the week. But also, I mean, you know, it's not the best valuation right now, not at least anymore, right? They've rallied an absolute ton since last quarter. Let's call it from the April lows. I mean, this stock is up 147%. So how much more can you truly want? I'm not saying the chart is looking bad. I'm just saying, like, we're getting a little bit rich here in terms of forward estimates for valuation. The market cap right now is 23 billion. So even in terms of price to sales, guys, you're running a little bit hot. Even if we take 2026 right here, it's trading at like what, 6 times forward price to sales for 2026. So, you know, financial institutions, and even though you can say it's a tech company, financial institutions, usually 5, 6 price to sales is starting to get a little bit up there, but still companies well positioned, and I'm not selling any of my shares. Moving on to Uber right now, Uber down 1.58% today, and the declines on Uber simply continue at this current stage, but that's fine, right? Now we are testing the daily higher lows. So we're almost losing the closest area of support that we have. We've now fully engulfed the most recent leg of rally, which does open up the door for the lower high into the lower low daily downtrend, similar to what we had back here, yeah? Well, here wasn't an engulfing move, but you know, sometimes you can set the daily downtrends in motion. If you set a daily downtrend in motion, very simple. You're looking for a weekly higher low. The weekly chart is looking good, weekly uptrend, and now you have a lot of space. Anything above 82, looking for a higher low for further trend continuation. If we come down a little bit more, like 87, 86, 85, I'll be looking to sell some short puts down here in the lower 80s, closer to support. And that's also an area that I would not mind adding a few more shares in the event that we do fall, you know, another 5, 6, 7, 8%. I wouldn't mind adding small in terms of shares, but the one thing I will not do is add shares up here when the valuation starts getting a little bit stretched. Moving on to TSM right now, TSM up about 0.26%, but none of that matters. TSM has earnings tomorrow, right? So keep that in mind in terms of TSM earnings. I'll just refresh the expected move for you guys right away. The expected move for tomorrow is 3.7%. So not that big of an expected move, right? So 3.7%, let's call it 4, will put you right back down to 4 to 228, and 4% to the upside would put you right about almost 250. So keep that in mind. If they move anything more than that, that would be outside the expected move. One thing to keep in mind on TSM is this guy right here, 226.91. Those are your daily higher lows. In the event you flush that without new highs, right? Because it's not really new highs right now. If you flush, that's a daily downtrend, and you would just be looking for very healthy, very casual weekly consolidation at this point. Anything above 206, looking for a weekly higher low for further trend continuation. I will be playing TSM on any pullbacks, any sharp pullbacks. You will probably see some short put orders from me. Talking about 215 down to roughly 200 is the sweet spot that I'll be targeting to sell some puts into the market. The demand should be strong. The revenue guidance, right, was strong the past 2 quarters. It probably should still be strong. And the valuation of TSM is not looking too bad at all. So keep all that in mind when looking at TSM earnings tomorrow. But I'll cover them on the channel for you anyways, and we'll kind of see where it's at. And I'll let you guys know, of course, if I am trading it either way, depending on the direction of their earnings. So that's the entire market rundown. Wasn't much to say today other than the moves on the banks and the moves on ASML. Everything else is just kind of, you know, It's kind of oscillating here. The SPY is really not breaking out, not breaking down, all things considered. So not a bad start to the month of July. A lot of the gains were had early on in the month, as we saw from the very quick upswing, right? Very early, first few days of the month. And then we've just been doing nothing for the past 2 weeks. So maybe a lot of the tech earnings that are coming in the next 2 weeks will be the lift catalyst for the markets. We will see. Or maybe if the earnings are underwhelming, maybe that's actually the catalyst that actually sends us down and ends up with an ever so rare month of July. Very tough to predict, but we'll do as we always do on the channel, guys. Take it one day at a time. Now let's spend a few minutes doing the breakdown of the biggest gainers and losers of the day, shall we? Okay, so we're going to start off with the biggest losers of the day, guys. We're just going to highlight a few that I want to talk about. We're going to talk about Micron today. So Micron, in my opinion, is indeed a buy, but we got to be a little bit more patient on it. If we do come down into the support range down here, 110 out of 100, that would be a fantastic opportunity to reload some Micron. They had fantastic earnings just a quarter ago, which we did cover on the channel, and you'd just essentially be looking for the infamous breakout and retest of a very large support area. I'll be looking to sell some puts down here, but maybe even go for some long directional swing trades. On to our solar companies. Solar still remains out of favor. I know a lot of people are trying to play this sector, guys. It's going to be very slow and very uncertain, at least for the next 2-3 quarters. We know that President Trump has not been that favorable in terms of the solar industry overall, which is why Enphase continues to bleed. It also has its own problems too, which we did cover last quarter for the company. And we also did cover FSLR. FSLR just maintaining flat right now. FSLR becomes a buy for me. If we do come down here in the 140 to 120 area, I may play it again. Maybe, but right now you're kind of in equidistant range, meaning that we're kind of halfway to resistance and halfway to support. So we can't really establish a good stop loss. If you put the stop loss down here, your take profit is up here. That's kind of a 1-to-1 risk to reward. I'd like for us to pull down a bit more to give me a bit more juice on that risk to reward factor. Talking about Celsius Holdings, Celsius, beautiful chart pattern right now, yeah? If we come down back here into the lower $40 range where all the EMAs are sitting on the weekly and just backtest this nice support range, that could be a nice entry for some longs to maybe retest the support, the resistance range above, which again is 51 down to 45. I'll be looking for CLH. If we come down there, you might see me sell some put options down here, but maybe even go for some long directional swing trades. And those are kind of only the ones that I wanted to cover. We'll do a last little tidbit here on Costco. So Costco for me becomes a buy again if we come back down to 920 to about 880. This whole region right there. You know what's funny is this looks exactly like what happened back here, yeah? Push, higher highs, lower, and then just consolidation, right? Push, higher highs, lower, and then just kind of consolidate. It looks almost the same. As a result, if we do come back down to the same thing that happened back there, I will probably be looking to add to my long-term Costco shares. Very difficult to swing trade this one because it just moves so slow, but I would be looking to add a bit of Costco shares if we do come down there. Those are kind of the only ones that I wanted to cover to the downside today. To the upside, Circle blasting off. I was saying that Circle was probably a very interesting swing trade here. A few of the members in my Discord did take it. I did put a trade alert out of the Discord as well, smashing through the resistance range target, which ended at 225. So this indeed would be the take profit zone, which has now been achieved. So congratulations to everybody who was able to participate in Circle. And if you have any long-term shares, I wouldn't be concerned. This is probably going to be a very hot narrative, at least for the next few quarters overall. Symbiotic. This one is just an absolute rocket ship. Another 9% to the upside, guys. Very tough to chase it right now. I'll redo the valuation at a later date. I haven't done it for a while. My bad on that. But you're kind of coming into the all-time high areas. If you have some swing shares from down here and you're up like 2x, you may want to consider just making some of the position free, especially if it is just a swing trade or a longer duration swing trade that you made an attempt with down there. Come into the take profit range. As I said, very tough to start a position right here. It's a very greedy long at that current stage. One that is not maybe a greedy long would be something like Tempest AI. Beautiful consolidation down here coming into our prior support area. Let me just put a nice little box here so you guys can see what I'm talking about, yeah? Resistance range right here. Resistance again, using it as support. The 200-day EMA is right down there too. Not that bad of a swing trade opportunity, guys, because we can use some of the weekly lows, yeah? Weekly low is 52. Your stop loss would go below there, and your take profit is up here. This is the style of risk to reward that I'm looking for, right? Somewhat of a relatively tight stop loss and a lot of reward to the upside. Not looking too bad. And you might also find me selling some options down here in terms of selling some short puts under that range right there. SMR. This was another one of those trades. This is like Tempest before Tempest actually happened. This one was coming down, daily downtrend, and we were noticing as well that the weekly lows were all the way down there. So we were saying that, you know, if we want to take an entry down here, the stop loss would be in around the support range down there, and you're targeting the highs. Not a bad trade opportunity, and it did actually follow through, so looking quite attractive. But now, take profit for the short-term swing trade has been reached. If you want to stretch it, you would be going out to the $50 psychological number. Once again, very tough to chase this trade up here, guys. You are late, so enter at your own risk. Rocket Lab is the same concept, right? Very late. I've been saying it for 3 days now. And I also always say with these momentum trades, even though it can go higher, it's just not best practice to start chasing some of these stocks, right? In the context of this market, it's fine, but whenever you get negative macro headlines, these stocks can pull back really fast. So the last thing you want to do is buy high, and then you get a 10-20% pullback, and then you're left holding the bag for a while, yeah? But congratulations to all the Rocket Lab shareholders out there. It's getting very rich right now. 23 billion in terms of their market cap right now, which is, as an expression of future sales, guys, that is literally like, you know, it's like what, 15 times forward price of sales for 2028? That is a lot. You're pricing in a lot of growth for the future right now. That being said, congratulations to all shareholders, but maybe not the worst time to sell some covered calls against your position, right? Same can be said about Roblox. What an exponential move on Roblox right now. Fantastic, but weekly overbought conditions coming into the last lines of defense that the Bears have right there. Not too bad, but guys, the move is so extended. Not only do you have some divergence here on the RSI, right? It's just a very extended move. I'd be very hesitant to chase this one right now. If you've been in prior, I don't really see a reason to sell. But this company, right, is kind of all over the place. Still, I mean, they're growing their user base really well. They're monetizing their user base really well, but no clear path to EPS profitability for the next 4 years. They're expanding revenue very well, however. But that being said, guys, right, it's just a very extended move. I'm not in the business of chasing these. AAPL was another decent proposition, right? If the entries were here with the stop loss below 45, we talked about it a few times on the channel back here. Now you're coming in to the expansionary phase. Your take profit is still around $70. So if you guys are able to take that trade, you should be looking pretty good right now. You can afford to put your stop loss at break even and kind of just ride it into the sunset, so to speak. And overall, that's pretty much most of the ones I wanted to cover. Maybe one last one, Shopify. We've been talking about Shopify here for the consolidation range. Bull flag hovering above resistance. Shopify looking very good. Fundamentals were very good after last quarterly earnings. Customer count was very strong and not so much affected by tariffs. Shopify looking very good for the breakout trade. The take profit on that would be in the 128 to 130 range overall. It's looking quite good, guys. On the daily time frame and also the weekly time frame, the bulls never lost control. It's been a slow grind higher. Maybe now you get to see the actual final pop into some of the highs that we saw earlier in the month of February. So there's been a lot of swing trades recently that we were able to do in the markets, and all of them are looking quite good at this current stage. So keep all that in mind, guys. Obviously, there's many more plays. I mean, Robinhood keeps clipping into the highs. You guys know my stance on that one. Congratulations if you've been in for a while, but excessively difficult to start a position up here, guys. I mean, you're just asking for it, right? When you start buying these things up here, can it go up further? Of course, guys. As I will say, everything can always go up further, right? But that's not the point. You're just building bad trading habits, right? Maybe you disagree with me, but I mean, I have been doing this for a very long time, 10, 12 years at this point, right? And I know how these move. Momentum is fun until it's not. And right now you're pricing in a lot of growth in terms of revenue too. You know, just in terms of forward price to sales, it's literally like 25 forward price to sales for 2025. You might say, yeah, but what about the future? Okay, we'll take 2027 sales, 2 years away, yeah? It's trading at $90 billion for $5 billion, right? 90 by 5, you're literally trading at an 18 forward price to sales. Show me the amount of tech companies that trade on an 18 forward price to sales, other than the ones in cybersecurity, right? That have double the revenue and EPS growth rate that this company does. So just be cautious, right? Not a bad time to be selling some covered calls or taking some money off the table for all of these very high velocity momentum trades that have ran an absolute ton. I'm glad you guys are able to make money, but you know, as they say, right? Don't get too greedy. Pigs get slaughtered, essentially, right? That's everything I had for you guys today in the video. Hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing if you're new too. We do these videos every Monday to Friday after the close. And as per usual, if you have any questions, always feel free to leave them down below in the comment section, and I'll get back to you as soon as humanly possible. And in the event, lastly but not least, you wanted to be part of a trading and investing community, you might consider joining our trading and investing community, where you get access to all of my trades in real time, whether it's the wheel trades, the directional trades, call debit spread, leap call contracts, right? Share swing trades. Here are all the trades that we've made over the past few months. Of course, the green check marks are little wins right there. The red check marks are little losses. You get access to all of my trades, no matter what the strategy, no matter what the style is. You also get access to our private morning live streams where I do them every Monday through Friday for about 2-3 hours after the open. I trade live and also take your questions on your stocks, your options, and your long-term portfolios. If you're not there, they're always recorded. You can also join our chat rooms and ask me your questions on whatever you have all throughout the day, and I'm very fast to answer. You get access to my private educational section where I go over all of my trading strategies in detail, technical analysis, fundamental analysis, how to grow accounts, small, medium, large accounts with various strategies there as well. Very good section. Our members have been finding tremendous value there too. And you also get access to all of my charts. You can copy paste all of my charts, guys. Whenever you see, support resistance levels, if you like my chart layout, you can copy my entire charts. It comes with all the technicals that I ever do and all of the fundamental analysis that I've done on over 200 different stocks that I redo once per quarter, essentially. You get access to all that. You can copy paste the charts, copy paste the watch lists, and make them your own. It's just an added benefit. So if you're interested in our trading and investing community, the link is down below in the video description. Hopefully I see you in there soon. And if not, I guess I'll see you right back here on the channel, guys. That's it for me. Take care. Have a wonderful evening. I'll see you guys tomorrow after the close. And should be an interesting one, guys. Big day tomorrow. TSM and Netflix. So pay attention to that. I'll be here to recap it all for you in tomorrow evening's video. Take care. Peace.